Oh, yeah. Most business owners are very much like you, where they're just because you're focused on running your business, on growing, on doing the right things to keep the doors open, keep revenue growing. And it requires this mindset shift. And I think a lot of business owners, like everybody else, we procrastinate.
Are you listening? Damn. Yeah.
Hello, everybody. We are excited today. We have, now I'm going to get this name right. If it kills me, I underlined it. Ashley Micciche.
You got it.
There you go. Ashley is the CEO of True North Retirement Advisors, an independent financial advisory firm. She manages $230 million in client assets and is located just outside of Portland, Oregon. Ashley specializes in designing, building, implementing custom-designed exit plans to help her business owner clients secure their final and most important business decision, something near to my heart, the exit from their business. She's on a mission to transition 300 small business owners successfully into retirement in the next 10 years, and she joins us here in studio for the next hour. Ashley, thanks for coming in.
Thank you so much for having me, Jerry.
We appreciate you coming all the way from where you did. I'm sure the traffic wasn't...
It was perfect.
Was it perfect?
Back roads all the way here.
Oh, there you go. Before we get into the specifics, I'm born and raised Portland. Mm-hmm. You and I talked for a few minutes before we started the podcast. Are you a Portland girl? Or?
I was born at St. Vincent's.
Oh, there you go. That's good. St. Vincent's right here in the heart of town. Mm-hmm. Yeah, there's not very many of us. We're becoming fewer and fewer, those of us that are born and raised in Portland.
Yeah. We're a dying breed.
Yeah, we are. You went to school here in Portland, Portland State, it looks like, mm-hmm. and have been a Portland girl, started your first business. I love this. I love your 100% profit margins on your, what was the business? I think I read it in your bio.
Ashley's Pet Plant and Paper Service.
Yeah, they get petting plants and picking up their mail when they went on vacation for $3 a day. She ran the business a complete monopoly with 100% profit margin. Yeah, that's fantastic. No overhead. Did you have some sense of wanting to be an entrepreneur? Let me back up just a second. This podcast, other than people having to listen to some of my ramblings, is about entrepreneurs and business and kind of where I came from and all of the different businesses that I've had. And I have a zealotry for getting the word out about being entrepreneurs. So I'm fascinated by people who even use the word entrepreneur as a 7-year-old. What's your, did you always think I wanted to be in business for myself, or some combination as you were going to school, or how did this come about?
Well, when I started that business, it's kind of, looking back, it's a weird thing because I actually just did it because I thought it would be kind of fun. And at the time it seemed totally normal, but looking back, I'm like, that's a little odd that I would think at 8 years old, like, oh, I should start a business and try to make money and do all those things. But it was just something I was interested in, and I don't even remember how I got the idea, but I was the only one in my neighborhood who did that. And I did it for about 3 years. And in the summertime, I would get really busy because I'd get referrals and it was so easy. All I had to do was like throw out a couple flyers and then people would call me.
Right.
And so I had this like disillusion about what, like, business is so easy.
There's
all you do,
you
just hang your shingle and people come to you.
Right. Yes.
And that is not true, as I found out. But it was a fun introduction to being a business owner. And I think through that experience, I kind of got the bug and realized that I wanted to use my creative abilities and talents and just kind of what I was good at. And I always would get in trouble for like talking too much in class, and I had sort of like an authority issue. And so I knew early on that I might have a hard time working for other people as well.
Wow. Yes. I've never heard it put quite like that, but I as soon as you said that, I identified 100% with that. I was an employee until I was 28 years old, and I was a really good employee. I probably had 20, 25 different jobs, but I was a really good employee. But it took me a while to mature into realizing that beholding to other people. I mean, I hate that I have a bank line of credit, right? I hate beholding to anybody. So I identify with that for sure. So you start that thing when you're young, you go to college. Did you have any sense that this is what you wanted to do? You wanted to go into exit planning and financial planning?
So my dad was back in the old days when it's a dirty word now, but stockbroker.
Yes.
So my dad was a stockbroker.
That's a good point. They don't use that word anymore, do they?
I didn't notice that. Manager now,
yes.
or financial advisor, or financial planner.
You're right. Mm-hmm. Stockbroker.
But back in the day, slinging stocks.
Sure. Yeah, that's right.
So he did that. He was doing that when I was born. And it was funny because sometimes if my mom was out of town or something, he would end up taking me along to client meetings, and he'd be like, "Hey, this is Ashley. She's going to take over for me someday." And I'd be like, "No, I'm not. I'm going to do whatever, something else." And so I never really wanted to be a business owner, work in business. In fact, I remember thinking when I was in early college, like late high school, early college, if I ever work an office job, just kill me now.
Right.
I don't want to sit at a desk all day. Like that is my idea of torture. And but then I went to college, had no idea what I wanted to major in. So I picked business because I thought, well, it's at least I could do something with that.
Yeah.
And then
as do a lot of people. As much as we talk to people, we run into that all the time.
Yeah.
Is that they're like, I didn't know what to do, so I just took a business course.
Yeah, exactly.
Yeah, right.
And I enjoyed it too. It wasn't just for practical. I liked it. But then when you're in business, you have to pick a track. And the one track that I really, really enjoyed and was sort of easy for me was finance. And at that point, I was like, oh man, now I see the writing on the wall. Like I see where this is going. I don't know if I want to do this, because my dad had always wanted me to at least try it out. Like, hey, come join me. Let's work together. Let's see if this, and he and I have always butted heads. And so I was like, office job, working with my dad. I don't know. I don't really want to do that. But then after college, so I graduated college in 2007. And then I just decided that, I'll give it a shot. And here I am 12 years later.
Wow.
So I found that I just really liked it. And it's not this like office job that I envision, because I get to help other people and work with different situation. And as you know, entrepreneurs are a rare and interesting breed of humans. And so it's
I'll take that as a compliment.
Well, I'm not, I'm sort of quirky myself too. And so it's just really fun to...
You have to be a little bit crazy to be an entrepreneur.
Yeah.
Yes.
Yeah. So I really enjoy it. Every day is different. Every client is different. And I started out actually specializing in 401k plans. Mm-hmm. And through that, I started working with a lot of business owners who were all kind of in their 50s, early 60s, and not really knowing how they were going to make that transition. And then I had about 7 years ago, I had a business owner client who dropped dead of a heart attack and watched sort of from the sidelines as his whole business sort of crumbled over the next 2 to 3 years.
Right.
They ended up selling to a competitor on the East Coast for much less than what the business was actually worth. And then there's all these employees who had worked there for 20, 30 years, who were late in their career, who were going to have a hard time finding another job.
Right.
They all got the, axe.
Yeah.
So that I was like, man, I got to start talking to my clients about this, because I hadn't been doing it. I was focused on the 401k plan, but not on the big picture. And so that was sort of the catalyst to start really focusing on, okay, what are the kinds of things that I, with my particular background, can bring to the table here and help my clients. And because I have this background on the financial side and on the planning side, especially, it's like, oh, we can carve out an exit plan. Like, we're going to do this, and then we're going to do this, and then we're going to do this. And I found that they just need someone to kind of guide them, because you could do 1,000 different things when figuring out how to exit your business. It's like, how do I focus on the right things and do those in the right order, so I'm not chasing all these little shiny objects all over the place?
Is the 401k, you don't hear that bandied about nearly as much as we did 10, 15 years ago. Is that still going strong? Is there still companies are doing that, and it's still a healthy market? Because for some reason, it's not advertised like it used to be, or somehow it's just kind of, you don't see it like it used to. I mean, it used to be, you had, what was your 401k? And then so everybody was asking us those questions, and I don't see that anymore.
Yeah, I mean, it continues to grow, especially because the stock market has been so strong over the.
Yeah.
I think there's, I mean, I don't want to quote numbers. This is just a wild guess, but there's like over $1 trillion in 401k plans all over the United States. So there's lots of people with a lot of money in 401k plans. And my role is just consulting. Like I just had a conversation with an employee today who's new in the plan, and I just help her get set up right in the plan, choose what she's going to save, pick her investments. And I do that as part of my service to this plan. But then I also work with the business owners and helping them transition out.
Okay.
Yeah.
Yeah. And so do you find that most business owners, let me ask the question this way. If you were to tell somebody that's in mid-career, right? Let's say they're 40, 45 years old, maybe their business is 5 or 6 years old. Is there a strategy for them, even though they're going to work till they're 60 or 70 or however old? Is there something that you can step in to do that gets that process started that early?
Yeah. I think it was Stephen Covey who said, begin with the end in mind.
Yes.
And I think even when you're starting your business, there are things you can do to set yourself up for success later. And a good example that I've come across and I've seen with other exits that have gone wrong is that, just making sure you have the right employment agreements in place.
Mm-hmm.
Because if you don't have those in place and then that person becomes a key employee for your exit, you may have to pay them a lot of money later on to get them to sign a new employment agreement.
Mm-hmm.
So sometimes just like documentation, and the same thing with, buy-sell agreement, if you have other owners in the business, making sure that those are set up how they should be. And I think in the early years, maybe outside of 10 years from the exit, 5-10 years from exit is when you can start really doing some things to prepare yourself and prepare the business. But beyond that, you could, the agreements, business continuity plans, like what happens if something happens to you? Like if you drop dead of a heart attack tomorrow, do you want your clients or your customers to be informed? Do you want them to receive a text message? Do you want them to be it's like an as needed basis. Like even those little things, business owners have very clear ideas about what they want to have happen, who they want to step in to replace them in the interim while they find a permanent replacement. Those are all things that you could do really early on, and it's not expensive to do. It's not time consuming, but it really sort of helps protect your business so that if something happens to you before you plan to exit, there are things in place to make sure that the business value doesn't just crater to nothing.
Right. And the neat thing about having Ashley here is that as I've bought, sold, and owned a dozen businesses probably in my life: car washes, gas stations, convenience stores, woodworking, lots of commercial real estate, development of lots and land and house building and flipping. And I mean, I have a huge transportation company, so I have my hands in and have had my hands in all of those different businesses. And I can tell you that while I have bought and sold businesses and lost money and made money, for my overall portfolio, I have zero strategy for exit. So I'll just be, which is cool about.
Well, perfect. I'm glad I'm here.
That you're sitting here, because I'm living proof. I'm 50 years old. I plan on work. They're going to find me dead behind a desk if I have my way, because I have no sense of retirement anyway.
Yeah.
But that doesn't mean that I shouldn't plan accordingly. And while I buy into a business and then I have an exit in a business, particularly on the real estate side, there's some long-term holds that I have, and then there's things that are going to be short-term, like development of lots. There's no long-term. I just come to work every day, try to make as much money as I can,
Figure it out later,
and figure it out later, and that's worked for me so far. But as I was reading your bio, I thought, this might be an interesting conversation, simply because you have the exact opposite sitting across the desk from you that probably would be served by all this. At least I can attest that there are business owners out here who don't do this. And I'm going to assume most don't.
Oh, yeah. Most business owners are very much like you, where they're just because you're focused on running your business, on growing, on doing the right things to keep the doors open, keep revenue growing. And it requires this mindset shift. And I think a lot of business owners, like everybody else, we procrastinate. And it's like, well, this isn't an immediate problem. It's like I'd like to do it. It'd be nice, but there's other fires I need to put out first. So it always sort of gets put off. But then the danger is that you get past the point of burnout and you're in, let's say you're 65 and you're like, I should have exited. I should have sold this 3 years ago, or I needed to bring in my successor and train somebody. Because if you're going to do it right, depending on what your exit path is, someone else needs to come in and take over and be able to replace you so you can start to step back. And if you're going to do that well, it's going to require some time to do that. So we can't wait till the end.
What do people who don't plan for that, what in your experience happens with them?
I watched 2 business owners within the last year and a half or so literally put the key in the lock one last time and walk away. And there was value there in their business.
And just leave it.
Just left it.
So had they made, I know 2 people who have done that. So I'm fascinated by that because I know they left value. But to them, they had rental property that they had amassed over the years. And, they had other investments and things of that nature. And they had made a ton of money. And so for them, which is fascinating to me because I don't understand how that mindset worked. But the thing that made them an entrepreneur is the thing that they walked away from at the end. But they're like, yeah, I have everything I need. It's like, okay, but that's worth money. Yeah. I don't want the headache.
Yeah. It was the exact same situation. Both of these people they did not need to sell their business for financial security.
Right.
But for most people, if you were to value your business and then value all your other assets outside your business represents, for most business owners, over half of your net worth.
Sure.
So just walking away from it or not taking the step, it's stupid.
Right. Why would you do that?
Yeah.
Right. It'd be like not turning in a lottery ticket.
Yeah, exactly.
Right? Yeah.
And
sell it and give it all away to charity if you want to.
Exactly.
But
yes.
don't.
And I think it's a mistake. And it's just part of it. Maybe just I think a lot of it is just burnout. It's like, I know that this is going to require time and effort and I'm done.
Yeah.
And I don't need to sell this. But it's really sad one of the businesses was a 3rd generation family business that he walked away from. And I thought, man, even from like a family legacy standpoint, just to not be able to carry that forward or even if he would have sold, like there was value in this business.
Yeah.
He didn't need to walk away. And even if he would have taken a couple of years to figure something, he could have figured something out with transitioning and making an internal succession or trying to sell the business because there was value there, but he didn't. He was like, nah, I don't feel like it.
Well, and that's the first generation. They do a ton of work, and it's rare. I don't know what the numbers are, but it's got to be 4%
business. 4% of businesses make it to the 3rd generation.
Yeah, I was going to say, and it's probably maybe 20% or so, I would guess, for the 2nd generation.
Yeah.
It's not very much. Mm-hmm. I know that, and only 4% make it to the 3rd generation. So somewhere along the line, I keep saying all of the real estate and all the things that I have, I'm going to work my butt off to get it done so that my kids can sell it, the day after I'm dead.
Yeah.
And then
So you got a plan.
Yeah. Yeah, my kids are just waiting. Now I don't think they do that, but I don't. Again, we have the most plan I have is a will in place. But
well, there you go. You're doing better than a lot of people.
At least I've got that done. So from a business owner's perspective, in your experience, what is the problem with valuation? One of the things that you had on your bio was that business owners, most of us aren't aware of what the value of our businesses are. And why is that?
Well, there's a lot of misconceptions about valuing your business. One is that it's going to be incredibly slow. Like it's going to take 4 to 6 weeks just to get a number. It's going to cost $10,000 or more, and it's going to be disruptive. Like someone's going to have to come in and talk to your employees, ask questions, comb through your books and records, then chastise you because they're not as clean as they should be. And then you pay all this money, disrupt your business, take all this time, and then you get this, one valuation at one moment in time, and then like 2 weeks later, it's sort of out of date.
Mm-hmm.
And so most business owners, unless they there are certain circumstances where you have to value, like if you were getting a divorce or something, like there are certain circumstances where you would need to value your business. But most business owners who are just curious and who would use a valuation for planning purposes to make some decisions about some other things, they're like, why would I pay all this money and disrupt my business and have all this done when it's just like a nice to know number?
Mm-hmm.
So most of them don't go through that process. And frankly, I wouldn't either, because it's just, why would I spend 6 figures on a valuation if I'm not ready to exit or I don't need to do it today?
I've bought and sold, like I said, over the years, and it seems like number one, knowing my my industry and what the number is, 3 to 5 times, whatever the multiple
like a rule
is,
of thumb for,
whatever that multiple is, and then I've been able to. I've always been, I always had a loose idea of what my business is worth just based on, the EBITDA minus anything I'm not that isn't going to stay in the business, and have had an idea there where I was wrong, or the mistake that I made, and where a broker or somebody from the outside came in to help me, was in what the market was really worth relative to what I read somewhere at some point something about what businesses are worth.
Yeah. Yeah, and it's so true. If you're going to sell to an outside third party, your business is worth whatever someone else is willing to pay for it,
Right, yes, right.
So it's and in a lot of sales, the valuation becomes irrelevant for that very reason. It's only worth what somebody else is willing to pay for it and what you're willing to sell it for.
Right.
So,
there's a tough part in there too. I've thought about selling businesses where I didn't, because there's, and this is, I guess this is kind of interesting from this perspective, is every month my bank account gets filled up again to the extent that it's empty. And I always looked at exiting, and then it's my investment income, right? But I have this operating company, and the operating company, churns out money, and then whatever I want to do, I do, and the next month it just fills back up again, and so that stopped me over the years from selling, because I couldn't see where I could make as much money.
Yes.
From an investment perspective.
Yes.
Almost like you're spending your own money as opposed to, that money that comes in every month from operations.
Yeah. And that's a very important point that is very common, because if you're running a successful and profitable business and you were to sell it, let's say you sell your business for $5 million. Well, that $5 million in terms of what you could turn around and invest that and then draw income from sustainable so you don't run out of money is probably a lot lower than what it's generating for you by just continuing to work in the business. So yeah, it is true. And I think that's why a lot of business owners don't want to fully exit, because they're giving up a pretty lucrative income stream that is continuing to go on and on and on. And so I don't blame business owners for not doing it if they can. The key, I think, is just to understand, like, how are you involved in the day-to-day right now, and how do you see that involvement changing over time? You don't have to fully exit, especially if you're going to do an inside transfer to an employee or a family member.
Right.
But sometimes, depending on the situation, they may just want to remove themselves altogether and maybe collect some type of retain some ownership, collect some type of income, but not be involved in the day-to-day anymore.
Right. Yeah.
So there's options.
I'm glad to hear you say that, because that I belong to a CEO group that I've talked about all the time. part of, find a mentor and find people that can help in your business. They kind of serve as my board and I serve as their board. You get together once a month. And I don't know any of them that, every time we broach the subject of selling our businesses, everybody just kind of looks the opposite direction and, and goes. And some of these guys are 70, 72, 73, and they just love going to work every day.
Yeah.
And they can't imagine not going to work. I have one buddy that owns a big printing company here in Portland, and he's in his 70s, and we just are on him all of the time.
Yeah.
You got to start the process at some point. So, sitting here with you, it just, it's so true what you're saying. It's exactly who we are. But I think conversations like this will help, and he knows who he is, and I'm sure he's listening. So this will be you reiterating what we always tell him is it's never too early to start or too late in his case, as he's in his 70s and has a very good business. And one of the things that come up all the time for business owners that we struggle with is that, I didn't have the best year I could have. Last year wasn't as good as it was 2 years ago. So let me get it back to what it was 2 years ago. And then we'll go, what do you tell a business owner that does that? Because I hear that all the time.
Gosh, that doesn't come up as an excuse very often. It's more about, I'm not ready. I don't feel like I'm ready, or I don't feel like that person that I've chosen to succeed me. Because most businesses are in some type of internal, very few, I don't know what the statistic is, but much more often the business will transition to an employee or a family member or something, rather than being sold. So, that can take a lot longer because you want to train that person. And so what I hear more often is, they're not quite ready, or I'm not quite ready to step back, or I really still like doing this or this. And that's fine. I'm not trying to force somebody out, but from the business continuing and making sure that the business continues after they retire, after they die, making sure that they're doing an efficient transfer of ownership from a tax planning perspective. Doing as much as possible when it's in your control and you're still alive is very important versus just after you die. And because things can get really messy at that point.
Right.
So I think it is very important for business owners to take steps while they are still alive and before they get to the point of burnout to figure out, okay, how am I involved today and how do I want to remain involved? And that's okay if you want to still be involved. In fact, one of my favorite stories about not retiring is there's an attorney. He's 106 years old. And he
still goes to work.
He goes to work like 3 days a week.
Yeah.
And there's this whole article in the New York Law Journal written about him. And I love it because it's like, yes, there's so many people out there who feel like they have to retire. I was just talking to a client yesterday. She's like, well, I'm, 67 and I feel like I should, but I really like going to work. And I'm like, so go to work.
Yeah.
Keep going to work. Like if you like it, keep going. So you don't have to retire. You don't have to transition out. And the beauty of being a business owner is that most people, like if you're an employee, you kind of have to make that decision. It is harder to find. You can still piece together part-time work and other things, but you have a real luxury as a business owner because you have a lot more control and say so, as long as you're in good health, about how you back away from the business and how that day-to-day involvement changes over time. Because you can retain ownership, you can still work on your terms, and it doesn't have to be this like severed exit. Now, most of the time, if you're going to sell to a third party, you may be involved for a year or two, and then there's sort of that sever there.
Right.
But especially for inside transfers, you can be like that guy. He was going like 4 days a week, and then he got pneumonia, and then he had to cut back to 3 days a week.
Which at that age will kill you. Yeah.
Exactly. It was a miracle he was still alive.
Wow. I know that I think my parents are 81 years old and I'm 50. And when they were my age, I was 20. They were a lot older than I am. Right. And I think so as the decades have gone on and the generations have gone on, we are much younger. You're however much younger you are than me. I think you already gave it away. So I think you're like 15 years younger than I am, if I did my math correctly.
That's good math.
Yeah.
Decent.
But, so I think when you're 50, I mean, I feel like I'm 35, but my parents, when they were my age and, up towards 60s, I mean, you were old. It was time to start. What home are you going to go into? And, what are you going to do? So those attitudes have really changed. Of course, we live I mean, when my parents were born in the 30s, the average lifespan was probably 45 or 50, I would guess. And now it's 75, 80. So, I mean, that makes a big difference, obviously. But I think that there is a lot of that. You said the lady was 67, and I'm just thinking that's 17 years from now. I don't feel any older than I did when I was doing this at 35. I feel smarter.
Yeah.
Right, I'm much more mature, and I have the whole lifetime of experiences behind me. But I can't see being 60 and going, oh, I need out. And I think that's a change in generations.
Did your parents do like physically demanding work as well?
No.
Oh.
Well, my mother was a waitress. I come from abject poverty, so very poor, and my dad had 1,000 jobs. So I have 8 brothers and sisters.
Wow.
Yeah, there's 9 kids. My parents had 6 kids when they were 22 years old.
So are you late in the birth order?
So my older 6 brothers and sisters, to give you an idea, are less than a year apart on average.
Wow.
And then 7 years later, they had me.
Are you guys Irish Catholic?
Catholic, yeah. They didn't, how'd you guess? They didn't want me to be an only child. And so I have a little brother that's 22 months younger than me and a little sister that's 4 years younger than I am.
Wow.
So yeah, it's really an interesting experience. But again, I'm generalizing when I say that people were older, but they just, in my experience, on average, they were all older. Just as a personality, just a society, you were older when you were in your 50s and 60s. And now, people are swimming the oceans and, all other kinds of stuff at 60 and 70 years old.
Yeah.
So I think that plays into it also, why we don't reach out to somebody like you, because there is a certain finality to it. And I think I'm going to live forever. And so the business is going to live forever.
Yeah.
And I don't think about exiting because I'm not going to turn 62 and, go off into the sunset. So there's a lot of, I didn't think about this until we're sitting here, a lot of psychology
very much
that goes into it.
Yeah.
If you delve into it.
There's actually not that many people who do what I do. It's very niche-y to help and work with business owners and helping them exit and do all the things that they need to do. My biggest competition is not other people who do what I do. My biggest competition is just the business owner doing nothing. So there is, and I totally understand the psychology around wanting to continue to work, especially as a business owner, because there is your whole life, it's almost like another child. And for a lot of business owners, sometimes they've chosen not to have kids because they were so involved in the business. And so, leaving that, it's almost like someone has died.
Yeah.
So there is a lot of psychology. There's a lot of just helping people exit at the right time for them. But it's always a balancing act, because it's like, well, you want to be able to exit on your terms while you're still in good health, while you can still enjoy your retirement. A lot of business owners feel like their business is running them versus them running their business. And so we want to just try to meet them where they are and help them take the necessary steps if they're 2 years out, 5 years out, 10 years out, or they're still not sure. There are things that they can do to protect their business, protect their family, even if they don't have that target timeline yet. So there's a place for a good exit planner to come in and help business owners at all stages, but particularly towards the end when they're starting to feel like, I think I'm ready to back away from this, or it's a good time to sell, or, they just get that sense maybe their industry is at a point of decline, or it's sort of flatlining, and they want to get out before like the what hits the fan.
Mm-hmm.
So, industries change, companies change, people change, and they're like, I don't feel like doing this anymore.
Without a doubt, there is, you didn't realize you're going to have to be a psychologist when you got into it, because without a doubt, you have It's almost number one. You made a point that I want to follow up on. I, without a doubt, at times feel like my businesses run me, and I don't run them. That's absolutely, and that's kind of always been the case. But it to me, it feels like as long as it's not a full-time running me, it's part of the sacrifice that you make. But you're spot on about that. The other thing too is the exit. So many people identify with their business, and that's particularly if they don't have kids, but the kids are gone now is another one, right? Where they're empty nesters, and their identity is wrapped up in this thing that they've created, and they can't imagine life. What am I going to do if I don't go to the office? My kids are just now. My youngest son just graduated from high school. I have two older kids. They're going to college and they're going to go study abroad, and one's going into the military, and so my wife, who's been home with the kids for all these years, is looking up going, what do I do now?
Yeah.
And I'm going, I get to go to work, right? So if I didn't get to go to work, for me, I would legitimately be concerned about, or I don't know that I'd even be able to entertain selling the businesses, even if it was the best thing for me, right? From a financial perspective, from an exit perspective. I'm speaking metaphorically here. Me, I wouldn't have any trouble. If I knew the high water mark and as much money as there is out in the world right now, I'd be gone. If I could figure out how to make more money than what I do doing what I'm doing, I would exit and do that. But I can see it really easily, but that's me at 50 after owning a business for 20 plus years.
Yeah.
It becomes our identity. And so many of my buddies, I think if they were sitting here, would tell you the same thing. So that's a hard hill to climb.
It is.
Yeah, you can't see over that. Let me ask you a couple of questions about just the market generally, if I could. I watched a couple of your videos and I was very interested in them.
And you still wanted me on the podcast?
Yeah, I know. I watched them too late. You were already on the way. And one was I have commercial property. And so I've done very well lately leasing out on a short-term basis. And in the last year and a half, the need for short-term storage has just, as soon as one moves out, a new one moves in. And the last three have all been 3 months to 6 months, and they are overbuying product from China because they're concerned about the tariffs.
Yeah.
So it's cheaper to pay me to rent it, or, to rent space. If we went out into this warehouse right now, you'd see it's half full of God knows what, all the way to
plastic wrapped Chinese
it's
stuff.
It's exactly right, all the way to the ceiling, 24 feet high, and so they're buying, because they're worried about the chance that those tariffs are going to take hold and ultimately hurt their margins, obviously.
Yeah.
So what is your take as somebody in the biz
on the tariff?
On just China in general and the tariffs more specifically?
Well, for certain industries, yes, I think the tariffs will be extremely damaging and will hurt revenue and profits and all of that. But what I'm mostly concerned about is how is it going to affect the overall economy? And if you look at, even if the tariffs go into effect how they are, it's going to have like a 0.5% impact on GDP. So not as big as what the news makes it out to be. Like, it's this devastating thing. We got to figure this out. And for certain industries, certain businesses who rely on trade with China, it will be very difficult. Like, even for my own business, we bought some furniture about a year ago, and in anticipation of the tariffs, they're like, well, the price is this, but in the next month, we're raising prices 7% to account for the tariffs. So you're already seeing that. I know that's happening in a lot of businesses, that you're already seeing prices change and people adjusting to that because of the tariffs. But from an overall economy and its impact on, industries across the board, I think it's not as bad as what people or what the news media will make it out to be.
Right. The on the podcast here, I always try to explain real quick where I come from. I was on the streets as a 17-year-old, so I have no education whatsoever, but I was always interested in business. And so when I started my own business, I knew At 28, I had no idea what any term meant other than what I heard every morning, the daily news brief, given the Business Insider for 30 seconds and the Dow Jones Industrial Average and the price of gold and all of those things, right? But I had no idea what any of these terms meant, and I had to learn it from scratch. So I always tried to if I use a term, we had a guy, we were doing a podcast earlier today talking about real estate and NOI and, defeasance and all the different, all
no
of
one
the
listening knows what he's talking
nobody
about.
knows what that is. So I find it so fascinating that I would stop and define exactly what he was talking about. And he was talking about cap rates and yield maintenance. And, all of that stuff that I've heard cap rates all of these years. So I just stop and I like to kind of explain at least a little bit, and I'm no expert, but I have experience. As an example, we hear about China all of the time. I agree with you on that part. Is it the uncertainty, though, of China, to boil it down, even more so than the tariffs? And I say that because if the 7% price on your furniture was already baked into the cake, the exchange is a whole lot easier. But that uncertainty of what might be, on the micro, it's you buying furniture, but in the macro, it really affects the market, does it, or does it not?
Oh, yeah. And a lot of times, when you hear about, especially looking back at previous recessions, it's almost like people's expectations, like consumer confidence. If I'm not feeling good about the future, then I'm going to hold my wallet a little bit closer and I'm not going to open it up as much. So definitely the psychology and expectations, uncertainty, a lot of that does drive behavior. So it could be more meaningful than that and have a bigger negative impact than what the prediction is if people start to think, oh gosh, this is going to be really bad, or
Right.
I got, so yeah, uncertainty can be a big driver. And it has been historically when you look at what drives recessions and what makes things worse. I mean, just looking back 08 and 09, people thought the world's financial system was, the world was coming to an end.
Yep.
And I was in the industry in that time, and there was a lot of days I was hiding under my desk.
Yes, you had just started too.
In the fetal
What a time to
position.
start.
Yeah, it was looking back, I feel very fortunate that I started when I did, because had I not seen that, I am more cautious today than I would have been had I started in a time when, the market just goes up.
That's a good point. I say to Billy, we had, there was a banker in here a couple of weeks ago, and just Billy's 26 years old. And I said, he's never known a recession. And he, again, it's been the longest period of growth, I believe, in the nation's history. And so sooner or later, there's going to be a correction of some sort. I don't know that it'll be necessarily significant, but it's going to correct.
Yeah.
And then people who have had it easy, relatively speaking, right, are going to learn what it's like when it's not easy and that competition really kicks in, it becomes survival of the fittest. So that's good for you. You're exactly right that you came out right when you did, because you had to live through, you just started probably the worst period of your entire life, knock on wood.
Yeah. Well, hopefully it won't be like that again. Cause it's very difficult when, someone was planning to retire, say in the next 6 months or a year, and now they're looking at working another 5 to 10 years because they cannot afford to retire, and they didn't want to keep working.
Right.
So it was an incredible learning experience. And, I had clients in tears.
Sure.
And I was upset.
It's all your fault.
Yeah, so it was a lot of responsibility. So I was 22 at that time, and one of my first clients gave me his $2 million investment portfolio to manage, and I was almost like, "Are you sure?" I just got my braces off here.
Yeah.
And so I remember that was right before things got really bad. That was early 2008, late 2007, early 2008. So things really got ugly that summer of 08, and then fall was free fall. But so I remember just working with him, and I had other clients. Now, thankfully, I didn't have a lot of clients, and I didn't. What happened a lot? Nobody saw it coming. It was out of most people's control. So unless I put everybody in cash and gold, and had some crystal ball, people were going to lose money. But watching that happen early in my career was very instructive, and I'm very thankful that it happened when it did.
How much did he lose on that $2 million?
Well, he was into real estate, and he had some like bad loans as well.
Mm-hmm.
And then he ended up margining his account, and I was like, don't do it. And so then he started getting margin calls. So it just exacerbated his bad returns.
This would be where I kick in and say margining is that he's essentially borrowing money to buy.
I'm using that jargon.
Yeah.
Dang it.
You're using somebody else's money saying to buy a stock. And then when that stock goes underwater, that's the margin call where you have to come up with the difference to bring it back to par.
Exactly.
Bring it back to even. See, there you go. Now you get what I mean. I try to explain those as they come up. So he had made some bad, as did everyone. I'm still holding a loan on land from 2006 that we're still working on. So I was right in the middle of that because I was doing development.
Yeah. And it's funny. I'm sure you saw this happen with people you knew too. Not just from a business standpoint, but like my sister lost her job at that time, and that was kind of scary for her and her family because she had 2 young kids.
Yeah.
The neighbors across the street from us, I don't know the circumstances, but their house ended up being foreclosed on, and it was just like all these things hit so close to home.
Yeah.
And then being in the thick of it with managing people's money at that time, it was just like, give me some Xanax.
Right. Now, the flip side to that is I'm guessing that it's been a pretty good business managing people's money over the last 4 or 5 years.
Oh, yeah. I mean, when we came out in 2009, the stock market bottomed in 2009, and then the economy, it took a little bit longer I feel like people didn't start feeling better until maybe 2012.
Yeah,
I mean, it took
a
really long time for psychologically people to be like, oh, okay, things are going to be okay. And then what's interesting is there's this big shift because now you talk to people, there are a lot of people who are a little bit worried and concerned, especially with like tariffs in China, and we've had this big run. But people, I did get the sense a couple of years ago that it's almost like we're making those same mistakes again. Like, oh, it just keeps going up,
right?
Keeps going up. Now, real estate, stock market, like everything, it's just people don't stop and think, okay, how can I protect myself if things go south?
Yes.
And so we can't be Pollyanna about everything. And there's a billionaire investor. His name is Howard Marks, and his whole philosophy is not about hitting home runs. It's like you just got to hit base hits and be smart, and that's how you make money. Is you avoid striking out all the time. You're not trying to hit home runs. You're just avoiding the strikeouts and to try to make progress and base hits.
That's so true. In my transportation company's 21 years old. And it's nice and it's steady and it just continues every day and it throws off cash and it employs a bunch of people and it's just a good business. And then I have the real estate, the commercial real estate's all pretty good, but the residential real estate that I started in 2006 has just been, it was great. And then, man, it was bad.
Yeah.
And then it's come back to great again. And so in that one, I wish I was a little more base hits. Mm-hmm. Like I am in my operating companies, and one of the things I'm proudest of is that my operating companies, my gas stations, convenience stores, car washes, transportation, I never lost money. Yeah. So I was able to through efficiencies keep, even though revenue was down, we were able to keep making money through all of that. So that's one thing I'm proudest of. And then the flip side is all the money got eaten up in the real estate, in the residential real estate. One more thing I wanted to ask you about is the Fed. And I think lots of people have questions about this. I know I always did until I figured out how it worked. But you hear all the time, the Fed's raising a quarter point, the Fed's dropping a quarter point. I understand how that works, but maybe from your side, flesh that out a little bit of the impact that has to the everyday person, the person on the street, not just a business owner, just, Bill and Mary Smith.
Yeah, I think you just hear that high level, the Fed cut rates by, 25 basis points, and then people don't even know what 25 basis points is.
Yes, right.
Like 1/4%. And, but you're right. People don't understand how that translates. Well, if you're in real estate, it's good because when you're borrowing money, or even if you're buying a car, if you're buying a house, now what the Fed is actually cutting rates, it's very, very, very short-term rates. They're not controlling the mortgage rates and car loans and all, but it all kind of feeds into those other rates as well. So cutting interest rates just makes borrowing money cheaper. So it kind of greases the wheels with the economy for businesses and everyday consumers as well. So there's that, but then there's a lot of complicated, and I actually have a hard time understanding this as well. It's because it's not intuitive how the tentacles kind of extend out to other things, but it impacts borrowing, it impacts businesses, it impacts, even your savings rate and what you get at the bank. Or if you own bonds in your investment portfolio, it changes that dynamic as well. It changes how much income you can get. It changes the value of the bonds in your portfolio. So it has a lot of effects in a lot of different areas for many different types of people.
The first mortgage I had on a building I have downtown, I got in 2006, and it was -3/4 from prime.
Wow.
Yes, that's a true story. That was a great loan I had. Yeah, that was an SBA loan that was -3/4.
Wow.
Yeah. In fact, the guy who did the loan for us was sitting in here a couple of weeks ago, and we were laughing about. He's like, "I've never seen it since or before, or I can't even believe we got that." So,
yeah. Well, a lot of people don't realize right now rates are so low around the world that there are places like in Germany. If you buy the equivalent of like a U.S. Treasury bond, but the German version of it, you actually have to pay them.
You're paying them, yeah.
They don't pay you interest. It's a negative interest rate that you get by putting. People are so scared, especially outside the United States, that they are willing to pay somebody the money just to hold it for them. Which to me, it's like, what?
Right.
Just stick it under your mattress.
Yeah. Doesn't make any sense.
Yeah,
right.
But they're so fearful about what's going to happen that they think that that's a better investment than not.
Well, I didn't want to get too far, but those are just some of the questions that always come up and the kind of stuff that I think, at least questions that I had when I was not informed on how things work, but that you hear all the time. So whenever I have somebody and I like to, or have somebody on that knows about these things, I like to get their opinion on it. Let me ask you another question, one more. Of all the businesses, particularly for me, the majority of my net worth is in real estate. It's probably 60-40, maybe 70-30. Is that typical for a business that's been, do you find that most companies own significant amounts of real estate if they've been around for a long time, or is it more?
I think it depends. A lot of, I was talking to somebody the other day where the value of the real estate where they operated the business out of, so it's tied to the business, but the value of the real estate was worth way more than the business itself. And so that's a common thing. But a lot of business owners will just rent the space that they operate out of too. Like we do that. My business doesn't own any real estate as part of our business. So it's a wide spectrum. But especially I've worked with clients who have, especially in Portland, where you have a lot of these commercial properties that they've owned for 30 plus years.
Yeah.
And they were worth peanuts. And now they're worth a lot of money.
Yeah.
Because a developer wants to come in and build an apartment complex on it. And they have this one level building. And they're like, man, I can sell this for like millions of dollars, or I can continue operating here and net like $100,000 a year of income.
Right. Yeah. That's it. Now that's the flip side. That's the other direction of what I was talking about earlier is you get that out and it benefits you. I know the building that I bought downtown, I bought in 2006, and I moved my company into it, my transportation company, and you didn't go into that neighborhood. If somebody was walking down the street, you watched them, right? Because they were probably going to try to break into your car. And now I had to move us out and buy other real estate and lease that building out. It just became over 13 years. But and which is what I'm always telling the young guys is look at it over that longer term horizon is really where the benefit is, and appreciation and compound interest and all of that good stuff.
Yeah.
What as we exit or as we wind this down.
As we exit this,
as we kick you the hell out of the building, as we wind this down, what do you want? What's kind of your message? What do you want people to hear that are business owners that are thinking about exiting the business? What's your approach to that for them?
Well, I would say even if you are not interested in exiting.
Oh, that's true.
Now.
You want to plan ahead. Sorry,
it's so important to because it's coming up. You know, people talk about it all the time. Like, man, the time flies. I have 2 kids. They're 2 and 5, and you talk to anybody with adult kids, and they're like, they always say, "Man, I'd give anything to like go back to that and just savor it more because they grow up so fast." And so, you know, the time goes quickly, and there are steps that business owners can take at any stage of the process. But I think the first step is what we sort of started with was talking about valuation. People do not take the time to value your business, but it's something with technology now that you can do. It doesn't cost you anything. You can do it for free. It doesn't have to be disruptive, and you can get a really good estimate of the value of your business, which can drive so many things. Your insurance, whether you're going to get a loan, like what direction you're going to take. So even if you're still in growth mode, I think the essential thing that every business owner needs to do is have a really good, solid understanding of what their business is worth. And so one of the things, we actually pay for this, but one of the things that we make available to anybody who wants to use it is a valuation tool. And so someone can go in with very few pieces of information and figure out what their business is worth.
And where do they go to do that?
So it's truenorthra.com/value my business. And there's a free checklist there. You get unlimited access to the valuation tool. It's like the Zillow for businesses because there's 55 million businesses in the United States in this system. So you get good comparative data with other businesses in your industry. So you're no longer having to rely on rules of thumb or like, oh, Joe sold down the street for this. Right. It's an accurate estimate. And the what we do is I boiled it down. There are a lot of different data points you can use to tighten in on the value of your business, but there are 8 that are essential. It's like revenue, pre-tax income, accounts payable. There's like 8 of them. And so with those 8 pieces of information, you could gather those really quickly, and in 10 minutes, you can figure out what your business is worth.
So we'll put that link when this comes out, and we'll make sure that we get the link. And that's the link to you. They can just go to your website. True North RA, did you say?
truenorthra.com. And then if you go to /value my business, it's all right there.
And if you are a business owner or you know somebody that is, it's been my experience that you're not as, that people aren't aware of what, I know a lot of business owners, probably 35 or 40. And if I were to put a number to it, I would say that 20% have a really good idea, maybe less than that, of what their business is worth. And then everybody else thinks their business is worth less than it is. Almost across the board. That's been my experience across. I have one friend of mine that has a business, does $22 million a year, but he had a down year last year. He had some one-time items. So he lost money. Mm-hmm. And I said, no, it's not necessarily only about, what's your industry, who's buying what are they paying for? Are they paying for cash flow? Are they paying for revenue? What are they paying for? Yeah. And he actually went out and did just like you said. Nice. And was floored by what the value of the company was.
It is good when it's the upside surprise.
Yeah, without a doubt. But I think most business owners aren't aware of what the value of what they have is, because you're dealing with it on a day-to-day basis, and you're making payroll, and you're paying payables, and you're waiting for this check to go in, and you're dealing with banks and customers, and you're living it. So it's kind of hard to see the forest for the trees, if to use that overused term, but really it is. And then, of course, you got the emotional side of it. So that's stuff that you'll help them navigate through. All right, tell us one more time, how does people get a hold of you?
It's truenorthra.com/value my business. All my contact information is there, and they can get the access to the tool, the valuation tool, and then the checklist that makes it easy to gather those pieces of information to enter it in to get their valuation for their business.
And Instagram, Facebook.
Gosh, my Instagram account, it's a bunch of golf pictures.
Oh, okay. Nothing you want to put out here then. Let me at least
LinkedIn and I have a channel. It's called True North Retirement on YouTube.
Okay.
And I put out videos every single week on there on exit planning.
Oh, nice.
Yeah.
That is Ashley Micciche,
Mm-hmm.
but let me spell it out for everybody so you can go look her up. M as in Mary, Icciche. I do not know how you get Micciche from that, but we'll take her word for it because it is her name. That is Ashley Micciche. Oh, man. I almost got out of here with doing it right. Micciche.
Micciche,
We
yeah.
really appreciate you coming on.
Thank
Also,
you. This
every
was a lot of fun.
I'm sorry. Every guest we have on our podcast, we always make a website up saying our guest, and that way anybody listening can just head to the website too and get a bio about you and all of your
awesome.
links just right there and easy.
Cool.
Excellent. Well, that wraps up this episode, everybody. Thank you for tuning in. Be sure to check us out on YouTube, Instagram, Facebook, iTunes, Google, Reddit. And don't forget about Spotify. Actually, both Jerry Brazie, there's a Jerry Brazie Podcast Instagram that's brand new. And then, of course, the old one that everybody's been on is just the Jerry Brazie Instagram. So you can check us out all of there. Go to the Jerry Brazie website and you will, it'll direct you. Send us your questions to questions@jerrybrazie.com. And remember, people, opportunities are everywhere, but you got to go get them. Peace.